Hello everyone, Jeb Handworker here. It's the week ending Friday, November 9th, 2018. Been an exciting few months to say the least. We saw pretty much all the gains that were made be wiped out in October, leading up to the midterm election. We saw a major decline following the interest rates hitting new highs. This is also coming at a time when the US dollar is hitting new highs. So we saw that it made a move down, the S&P 500 made a move down to the 200-day moving average, sliced below it, rallied above it for a couple of days, and then broke through it to the downside on high volume. So lots of distribution. The buying here has been on lower volume. So I'm not yet convinced that we're out of the woods yet. Even though we've bounced back up above the 200-day moving average, we still have to deal with this declining 50-day moving average, which is still in declining mode and again should be acting as resistance. So we're in the classic bulls versus bears battle here between supply and demand with the stock market. So the stocks bounced above the 200-day moving average, which is bullish, but yet not convincing enough because this 50-day is still hovering above and acting as resistance. So we will see over the next few weeks going into the holiday season what happens here over the next few weeks. Will it be able to break through the 50-day moving average with a holiday rally, or will it continue lower and then have another sell signal breaking below the 200-day moving average? Meanwhile, the selling today has not been on high volume. Volume is our clue that we're watching. Right now, the volume seems to be all selling volume, not a lot of buying volume. So the bears are a little bit, I would say, from the volume side in control here. And until we see a real high volume breakout above that 50-day moving average, I still think that we're at the beginning of a larger decline. And looking at the juniors here, I was very excited when I saw this high volume breakout above the 50-day moving average after we were in several weeks, months of decline. And I thought that this would be changing and we'd get some follow through here, but we have not yet seen much follow through with the junior gold miners, and a lot of mining, really great mining stocks hitting all-time new 52-week lows, including IM Gold, Yamana Gold, America Silver, Alexco, First Mining. The list goes on and on. Alamos, Yamana. So it's the mining stocks are all in depression mode, and we're not able to get any sort of follow through yet, even though I thought with stocks declining that we would hold up here and that there'd be more accumulation here in the junior miners. But we've seen some accumulation here in September and with the breakout, but no follow through yet. But we've seen as the GDXJ has gotten to these levels before, we see here bottoming in August, almost like a reverse head and shoulders. So let's see if this area here, the 27 range, starts, we get some buying in. But since that breakout in October, the juniors have not seen the follow through that I expected. Again, we're in tax loss selling season all the way up till the end of December. And, so maybe I was a little bit too enthusiastic back in October when I saw this high volume peak, that things would start getting back into track. I was hoping that we would get a more significant rally and follow through, but we did not, and it was a little bit of a fake out here. So let's hope that these lows can hold, and the tax loss selling through December with the juniors doesn't bring us into newer lows, but there's a high risk that it will. So make sure you keep your powder dry over the next few weeks, as you're going to see some of these top gold miners hitting new lows. Now, take a look at this chart on gold. Like here in early October, we had this huge volume breakout, increasing volume, and we've seen some accumulation, but not a lot of follow through. And we're now testing the 50-day, which was declining, but you see it started basing out here, and now it's increasing. So short term, and with the higher volume, I would say we're on the bullish side here with gold, and that we should see some support coming through. But I don't like to see 5 days in a row of selling here with gold, and I don't like to see this bearish MACD crossover. And I would have liked to seen with this big breakout here some follow through, but it hasn't happened yet. Until the S&P starts really declining below that 200-day moving average and we get more into bear market and this US dollar starts peaking out and we have to start maybe decreasing rates rather than increasing rates, will we see this big significant rally in gold. But we may be weeks away from that. We may see that in the first quarter of 2019. Remember, the central banks are buying gold at record levels now. Even though the prices, and there's a record short on the paper market in gold. We haven't seen this record short since 2015. And we saw what happened when we just saw a little short covering in 2016, what sort of rally we had. And what about when we actually get buying coming in into the junior market again, into the small cap market? The small cap market, the venture market in Canada has been very weak for many years now. So we need to attract a new base. That's going to come through discoveries. That's going to be coming through the dollar beginning to peak out and interest rates again going back to negative and going to decreasing again. And that may be coming around sooner than we think. We'll see if the stocks can hold up here. Meanwhile, the 50 days beginning to go down, whereas with gold, the 200 days, the 50 days moving higher. But still a lot of work that needs to be done with gold. We've been in a bad bear market for many years, so you see here that 200-day that's sloping down here slowly. That's going to be a strong resistance point until we can get above that. And then we can say, hey, we're in a new bull market in gold. But we're far from that new bull market in gold. We're still in a market of struggling to get out of a bear market and out of a downtrend, and out of a depression in gold. We're still far from a bull market in gold, but there are some signs that record short in gold, this high volume breakout after many months, the highest volume in 2018. Keeping a close eye here on the stocks, on gold, on the juniors, and on some areas that we're seeing some very powerful chart breakouts. As you may know, you may have heard about the trade war with Trump and China. Well, for many years we were discussing one tool the Chinese that have been using for years with this trade war with the U.S. It's not just been going on just recently. Trade war has been going on for many years. And one of the tools the Chinese have used is the commodity space, and especially rare earths. So President Trump has an executive order 13806, which talks about this industrial base and supply chain. And this rare earths are going to be coming more into play. And other important commodities such as uranium, where there's been a new law for U.S. uranium production, so it's not all controlled by the Russians. Or the rare earths and graphite, and lithium and cobalt, all controlled by the Chinese or the DRC. So there's some really important developments in the junior mining sector, despite the Canadian venture being completely broken. And from what I hear, the Canadian banks, have not been so friendly to these companies with these shorting, record shorts on these junior mining companies. So there's some really exciting, important developments happening in rare earths, in uranium, in these junior mining sectors that are so critical, and they're so depressed and beaten down now by the shorts. You all know that since early September, late August, I've been highlighting the breakout in the spot price. Now, there's all these funds that are starting in different places buying uranium now, so there's some new demand from these financial funds as they're coming in and saying, hey, we're at a bottom here. And the chart here for Cameco, which is the largest publicly traded company, we just saw a breakout this week, November 6, 2018. Look right up here, triple top breakout in Cameco. So we're beginning to see the uranium stocks breaking out, following the spot price higher. So we all know that we're talking about electric cars and moving away from fossil fuels. Well, even the environmentalists realize you want to move away from fossil fuels, you got to support nuclear power. Nuclear power is the way. Nuclear and electric vehicles that's the way of the future. And we're seeing here a potential big breakout here and a new bull market in the uranium sector. So stay tuned to goldstocktrades.com. Week ending November 9th. Some really good signs in uranium, in rare earths, in the gold sector, which is not in a bull market yet, but it might be on the verge of breaking out of that bear market. And the stock market, the overall stock market, the S&P 500, we're watching this battle between the bulls and bears to keep this recent correction, just a correction, not a bear market. But we're seeing a lot of the leaders, such as Apple and Amazon, getting hit really hard, and Google, Alphabet, getting hit hard. So the leaders are under pressure. The stocks still look technically bearish. Not a lot of volume coming on the upside. Whereas with gold, we're seeing some real strong volume coming on buying. Just need to see a little more follow-through, which we may get after tax loss selling season. That may end in the next few weeks. So stay tuned to Gold Stock Trades. It's going to be an exciting end of the year with some of our top gold miners hitting multi-year lows and some of our sectors coming back into favor. Have a great weekend.